why do you own stocks though? Here's the thing. Would you rather own a debt of the government that can't repay it and that they have all these outstanding obligations? Or would you rather own a stock that's independent, that has free cash flow that you can back up? I know I can own this company that is producing this amount of cash flow, that has a wide moat, and that is expanding its revenue, expanding its margins, or paying its dividend, and that's expanding as well. Or do I want to own the debt of it? And so I fall in that deal. I'm very optimistic on equities. I think that we're going to have to reevaluate historical multiples on what's normal, and we're going to have to inflation adjust the normal multiple. And I think that's a very, very good exercise I'd love to do. And we've already been doing that, but I'd love to actually quantify it down into a research paper on saying, if we go back to the 1980s even and say that we inflation adjust multiples on what's normal, Shiller P, like let's just say Shiller P, right? And Shiller P is the 10-year historical average on the individual security, not the base price over earnings of the overall broad market of that security. And so it gives you a more granular allocation of that individual security, because some price to earnings or PE of individual securities history over the last 10 years might be higher than, you might get an NVIDIA or a Meta or a Coca, higher than what a Coca-Cola would be, because it's a higher growth company. And so you have to take those bias on the growth rate of the company in account. And so when you look at it from a standpoint of a Shiller PE and you inflation adjust that Shiller PE, I'm curious to see if we're overvalued or undervalued. Right now, if you take it on a broad base, surface level, top line level, I would say we're 2 times overvalued what current value is. Story.